Hello and welcome to Mutual Fund Talk. My name is Naveen Soni. This is Teachers Day special with investment guru A. Balasubramanian, who is the managing director and CEO at Aditya Birla Sun Life AMC. And he's been, of course, with the Aditya Birla Sun Life since 1994. So he has a whole lot of experience. He, of course, is revered in the markets for his views. So today we thought on this occasion of Teachers Day, let's have an investment guru and tell you about his mantras. Bala, thank you so much for joining in today, and happy Teachers Day as well.
Yeah, thank you, Naveen, and it's also my pleasure to be talking on this subject on the market and the other stuff related to investment on the very auspicious day of Teachers Day. Of course, Guru is always is a must for all of us. So therefore, I also take this opportunity to thank all the teachers and gurus who have played their role in our own life. In general, for everyone.
Sure. So, you've been with Aditya Birla for a long time, and you have also been a successful leader on the investment horizon. People listen to you on television shows, people read your views in print. So, tell us about your journey, because what we know is what you are now, but what has made you or what has evolved you into your current form? It would be really interesting to know that.
Yeah, I think not sure, Naveen, whether successful or not. Definitely the journey has been good since the time I moved into the capital market by way of working for Canbank Financial Services in the early parts of 1990s, and then moved on to other organizations. And of course, since Birla I joined in the year 1994, it's been a great journey being part of Aditya Birla Sun Life Mutual Fund and Aditya Birla Group. Also, as part of the Aditya Birla, the entire family, which is Aditya Birla Capital, as well as being part of the capital market in general, with a lot of the friends with whom you interact, especially on the investment world. And that also has been a great journey in the last 26 years, being part of the Aditya Birla Sun Life Mutual Fund. I think one of the things that has remained constant during the whole journey is ups and downs in the market. It's natural, and learning curve has to be constant, and the world has kept changing at every point of time. After say every decade or every 5 years, things keep changing. In this process, for me personally, how you remain rather with the situation that is changing, at the same time stick to your core philosophy of investment or core principle in which as an individual one should operate. At the same time, keep learning new things, and that will have a huge impact on the way forward. And that's been something which has been the big journey. And I can only say that I've seen the index, which is Sensex, with the year 1992, as close to about 3,000, and today the index is 40,000.
Yeah.
So that's the way. I think if you look at the journey, also I've seen a lot of ups and downs. But at the end of the day, as long as I've kept up my focus only to stay focused on what we are doing and how we are doing, how we are learning, and how working with the team. And that has been something has been quite cherishing for myself.
Sure. So, what were the lessons that you picked up early on? The markets have, of course, changed in terms of how they operate. Now it's all digital. At that time, it was much on paper. But, people say that fundamentals remain the same. So, would that be correct to say that, the lessons that you pick up in the market, they are forever. They are evergreen. And they are what have helped you and the other peers in the industry to stay strong, to be resilient?
I think if see the fundamentals of the analysis remains the same. It's like what they say, 1 + 1 is equal to 2, whether it is the previous generation or this generation, even for the future generation. I think what remains remains the same is a fundamental analysis. At the same time, taking into account the evolving situation, that's something which of course keep changing. When I mean, I think you mentioned about digital technologies playing a bigger role.
Right.
Because when we all began our career in the early 90s, information seeking itself was one of the greatest jobs. So gathering intelligence and then go around, talk to people, then gathering information, gathering intelligence, gathering insight was one of the greatest job. And reading, going and looking for annual reports of companies and wait for the annual reports of companies in the month of June through your postal courier or speed post, and then immediately read the balance sheet and then do analysis on companies and know about what the company is talking about themselves, both as a company as well as the journey of the industry and so on and so forth. So all those information used to be collated, called out from the annual report and then read it. And the same way for Reserve Bank of India, we all deal with the money actually at the end of the day. We need to look for monetary policies coming in from Reserve Bank of India. Therefore, you have to wait for the printout to come. So I think from from those days, from where information gathering was today information gathering is not the key. Information analysis actually is the key. So those days analysis also was important, no doubt, but it used to come later. I'll give you another simple example. When I used to be working near the stock exchange, we used to go and look for a wow copy at the end of the day. So there used to be every day the price that which the stocks are traded in the market is known only to the people who are in the ring, who are closed circuit broking firms, the employees of broking firms, and no other people who know actually what kind of price were existing today. Those information available. Those information available with some kind of delay in the PTA screen. That is the only screen that used to be available. Today we have a Reuters, we have Bloomberg, we have many things. So we used to only use the PTI, and the PTA used to give a delayed feeds. And then we used to go and look for the bow copy, and each in price we used to look at it. Oh, this stock is traded at this price, this stock is traded at this price, and so much volume has happened, all those things. And today, all such information I don't go and seek for it. I click of a button to the digital, I get it. Then the question is, my brain remains the same. As I mentioned earlier, analysis, brain remains the same. The question is, how do you want to divert your mind and your brain to analyze differently the same stuff which you would have done in the past?
Okay. So when you started, one is of course the operational aspect that you were talking about. Was there someone whom you started following, so like people follow you in this point in time? Was there someone internationally or in India whom you started following and picked up some lessons and started evolving your own analysis, theories and experience, etc.?
Not to be very frank, not so much in terms of, okay, we keep somebody as guru in the investment world overseas. And of course, everybody can take the name of commonly and Warren Buffett, because he's an asset for everyone. So therefore, that's something I was not that much keen reading and knowing about such stuffs in the global market. But having said that, within India, my own boss used to be a veteran on the investment world, and by name is Balasubramanian. He was a veteran. And when my other boss, of course, who brought me to Balasubramanian Mutual Fund, Mr. S.K. Mitra, he himself was a veteran in the financial market and in building business, building people, and getting into the new businesses, and so on and so forth. So these are two combinations. There are two set of people. One is, of course, an expert in the investment world. Another person actually is equally good on building business and building credit. And these were the two type of people. Of course, I used to just see it. I mean, sometimes seeing itself will give you a learning, and working with them itself will give a learning. And seeing their operating style, the way approach things, either for finding the future path or finding a solution, itself will give you a learning. So my learning has been of this nature. And of course, on top of it, most of my learning used to come from reading the business journals, continuous basis. And those business journals could be like Business India itself. I used to carry lots and lots of information about the economic, market, companies, and the same thing used to go for even economic times. There also used to be another magazine, which of course is no more existing today, a magazine called Financial Wizards. And they used to be one of the most hottest newspaper on the financial market and stock market in those days. And the moment it comes, you to read it to know about the companies, know about the investment world. And then as over a period of time, you also learn from some of those learnings, mistakes, and then keep correcting it on an ongoing basis.
Okay, sure. So if we can actually compare it to like a Sagar Manthan, all these years of your operations in the mutual fund industry or the stock market industry. So what would be 5 things that you would say have been churned out of that Manthan, which are like the golden rules, which are forever and which people must follow, and they will hold good for all the times and for everyone?
Yeah, I think clearly, Naveen, from my point of view, which is part of my own learning, which I still feel relevant, then first and foremost, the discipline that one need to build in while going about doing anything, whether it is investment or anything. That's something, the discipline that one need to maintain while carrying out those tasks, and also being committed. The second is being committed to deliver the task that has been given to you, or that's something which has been taken up personally. So that's something which is there. The maintaining discipline and having a commitment to ensure it's done. Of course, third, of course, is about building a passion towards that. I think while these things are there, but the passion is not there, and then being passionate about what is being driven, that's again third, which is there. And the fourth is while having an open mind, while doing things, having a stubborn, rigid view many times may put us into difficulty. Therefore, how well you are flexible, and then you are able to actually make some kind of course correction and thing that we are doing. That's the fourth thing, being flexible. And of course, fifth is stay focused on the execution. When I mean execution, okay, if you have taken a task and it needs to be completed, whether it is identifying companies or whether it is identifying opportunities in the credit market or an execution of a trade, and all those things, there's a lot of element of the execution is there. It's not about doing right or wrong. It's about doing it is important. Therefore, maybe I'll call it as execution and do it. Instead of saying execution, probably I'll say do it. Outcome of that such execution would be known only later on, and one doesn't know actually at the time of doing it. So basically, if you have to just summarize it, clearly is the discipline, commitment, passion, and about the do it kind of attitude, and also which is the fifth one I mentioned.
Focus.
Focus and stay focused. And that's something which I think it's the key learning which I feel, and I think these learnings will remain relevant even going forward as far as I'm concerned.
Okay, so folks, all these rules or these learnings you need to note down, and these are also the success mantras, whether it's the capital markets or mutual funds or any other discipline that you work in. But now let's talk about the markets. Let's talk about the investments. What are the common mistakes that you have observed people making, and you would say should be avoided at all costs? Because in all kinds of markets there are winners, whether the markets are falling or rising. Even in rising markets you have losers. Even in falling markets you have winners. It's all a matter of following certain set of rules. So what are those mistakes? You've spoken about what we should do in terms of the positives, but what are the negatives that you would say must be avoided?
I think clearly one of the area where which I believe that we all make mistakes. First and foremost, getting carried away, and there is a momentum, there is a feel good factor, and there is a lot of wow factors going around. So there's high probability that in such a euphoria kind of scenario, there is a probability that one will get carried away with that crowd and therefore can land yourself in trouble in the investment world. So that's something which is effectively not able to see that can put us in risk. Second is, and of course, when we make an investment, many times we do look at very short term, because we look at, okay, now the next 6 months kind of view, 1 month, 1 year kind of view. And I think in the change world, when technology is changing, when people are changing and people are not willing to adapt, and that's something which I think is not just being good, not be necessarily important, and being good and have an attitude towards making it further good on an ongoing basis by changing the business or changing the way we do things on a continuous basis would also remain key. Many times we make mistakes of looking at something which is doable in the short term. Therefore, you come to a conclusion that something is a great thing to start or great things to invest. But probably one may discover after sometimes did not live up to their expectations. So this is where I think we have made mistakes, even companies, though I could see it myself. So I was not responsible. But I think being part of the whole team, you also remain responsible, no doubt. And that's something we have seen it where we invested in companies, and the companies today no more existing. It's because the technology have changed. So I'll give you an example. Like, for example, we were extremely bullish on a company which used to make that the CD, which used to come in tape. And then today, if you look at, there is no CD of that kind. The cassette, I'm saying, there is no CD. Of course, CD is still there. But the thing, how the technology changed and then kept removing the product, and then they were becoming obsolete. So that I think how we are able to see the change coming your way in the future, and how that's being taken into account in your investment decision remains extremely key. And these are some of the mistakes that we've done in the past. Basically, looking at beyond the your reach and see whether whatever is being done is it sustainable. Not for your generation, even beyond the generation.
Okay. Now, the pandemic situation that has come, of course, markets have seen ups and downs, but this is unprecedented. Nobody had thought of, nobody had, of course, seen. So what are the lessons that this pandemic has given? Because nobody had really put it in the textbook, so to say. All the other occasions, maybe a depression had which had come in 1929-30, that had a few lessons for the future depressions. Some of the falls that had happened in the markets, those also had lessons for the future falls, or even for that matter, the upward movement. So, those were seen and those were known how to react to those. But a situation like this, which was unimaginable, that has now come. So what are the lessons that this one has brought in?
I think pandemic is something which suddenly comes and hits you, and again the world has come to a standstill. I think some other thing which I think remains relevant from business point of view, change is constant, and this kind of change also would come at any point of time. Therefore, how well you are prepared with the change, so that this kind of occasion when it comes, not necessarily you will be able to fully escape the pandemic related issues and its impact on the individuals and business, but you can be well prepared. So what we call it is immunity, right? It's about immunity. It's also equally important from business point of view. How you are able to keep the business immune to such kind of risk. We can't avoid it. So you can only be relatively safer. And also how you prepare yourself for, as part of the constant learning, since we are talking about Teachers' Day, the constant learning that you build at each year may also come in handy to handle such kind of pandemic situations relatively in a better manner. So I'll give an example that in our own company, the same Zoom video con call we introduced in the year 2018, sorry. We introduced 2018. That point of time, people are not comfortable using Zoom video, and where people still preferring to go and meet customers or travel quite frequently. But as the time progressed, when the pandemic situation came, you don't need to learn how to use that, but you are at it. You keep going. So I'm giving you a simple example. There will be many such things being prepared without, of course, knowing the pandemic situation is going to come. They're always preparing for like black swan event. Whenever such thing happens, then are we well prepared? That's part of the risk management. For one of the key learning from the pandemic situation is risk management generally is being talked about it, but how much truly we follow risk mitigation process, the exercise that we undertake, seriously do it, and then keep that as part of your normal business activities rather than keeping it as a one-off activities to be carried out once in a while types.
Okay. So if one were to draw, whether it's a successful exercise or we are still to be there in terms of dealing with these kind of crises, particularly pandemic, how well has the industry done? Do you think, because some of the things, not knowing that the pandemic will come, were sort of coming into the process, or digitization was happening. So do you think now the industry is back on its feet and it's done well to deal with this kind of a situation?
So I think given the situations in which we are there, the whole movements rather, it's come to a standstill. At the same time, business has to be carried out. That's, I think, in the whole industry, including banking industry, has done a great job during this period. I think one of the things which I'm extremely happy as well as admire the way Reserve Bank of India and our central bankers have carried out in changing the whole the check-based system of clearing to the online-based clearing of payment, which is a unified payment interface (UPI), which has been created in India. As actually it was started well ahead of time, and moving away from check-based system actually to an online-based system of transfer of money, it's something came in handy, extremely good. Second is the adoption of digital technology in India. Thanks to the demon which Prime Minister of the country had announced, but for the demonetization, though it had its own impact on the economy and the way I think people behaved and so on and so forth in dealing with the cash, but the fact of the matter is converted every citizen of the country and post demon to adapt themselves to the online way of transacting as well as the digital way of transacting. And during the pandemic period, and that came in extremely handy because we are well prepared so much well in advance without knowing pandemic is coming. This is something I think has come in handy. So therefore, I would say the whole industry, whether it is mutual fund or the banking industry, or in general the financial service industries, have managed the whole the pandemic situation during the lockdown period extremely well, given the fact that the whole India as a system were reasonably prepared on adapting to the digital technology, thanks to the reason which I just mentioned, including Prime Minister of the country, Mr. Narendra Modi, have to be given that credit, as well as Reserve Bank of India, current governor as well as the past governors who prepared the whole banking system on these lines. I still remember there were days in my early days of 90s, we used to go run around for depositing high value check. And the high value checks will get cleared on the same day, and low value checks will used to take about 10 days. And today, nothing takes more than a few minutes and few hours. And that's something, it's even textbook, if you go and see, probably you'll find in the textbook a high value name of itself is missing today. Right? Yeah. It is a history. Yeah.
Okay. So, as a guru, it's also your responsibility in a sense that the learnings have to be passed on, the culture has to be passed on to the next generation and also of your peer group. So how does one pass these learnings to the next generation? What are the things that must be given to them? Some sort of hand-holding that needs to be done in telling the next generation that these are the things that you must be prepared with.
I think clearly, Naveen, I'm a firm believer. One is the learning is one part, and second is sharing or imparting the knowledge to the people within your know-how on a continuous basis is also important. So it's about learning, teaching. I'm not talking about preaching. Teaching is very important. And second is what you preach, as long as you're able to practice it to a large extent. And that actually goes to prove that what you preach is being practiced, and what you practice is working well. So it's like seeing is believing types. So that's something which again, it's something every generation has to get passed on to the next level of leaders, next level of set of people who are our future leaders. So in effect, whatever the learning that is being done, irrespective of whatever the age, irrespective of whatever the field in which you are working, that also need to be imported on a continuous basis in some form or other, and not necessarily the view that is being expressed have to be always right, have to be always acceptable, have to be always aligned to the what the viewers would like to see it, or people would like to learn. But in everything that you say, there is an element of truth, there is an element of insight, there is an element of experience. All such things need to be passed on, conveyed, communicated. Therefore, the communication, imparting knowledge on a continuous basis would be key to the success, in my view, not just for the receiver alone, even for the giver. And my always belief is when you start, even sometimes I go for some lectures in colleges, and I accept such kind of invitation only for one simple reason, that the moment you accept the invitation, then you prepare yourself 2-3 days before, you start aligning your thought process, what you want to convey, and then you crystallize some of your thoughts from your past learning, and then give it to the audience. And that's something which I have felt it actually also uplift the individuals while learning and imparting. It helps individuals also to crystallize the thoughts, and therefore it enhances their own way of thinking.
So this is how the wisdom passes from one generation to the other, and it's quite important and a part of the process that we all have to live in our day-to-day lives. And now, we can't let you go before you give us your outlook on the stock markets, on the capital markets as a whole, or also, the debt system or the debt markets. So, we've seen that there's been an exceptional dip in the GDP growth, but this also because, there was an extraordinary situation of a lockdown where the industrial activity had come to a halt. But if you were to take, a year's view or maybe a couple of years view, things have bounced back. We've seen that, the levels that were there around March when the markets fell, many of them have come back to where they were earlier. But if one was to take a macro look and on the basis of that, an outlook on the markets, what's your view?
Yeah, I think view on the market, of course, there is no doubt there is a disconnect between the market euphoria and the sentiment that we are seeing versus the real economy. Real economy is bound to be, of course, negative. The question doesn't arise why it should be positive, given the fact that last 5-6 months, the whole world was locked down, under a lockdown. And India, this lockdown was quite severe compared to the global economy. Most of the activities were at standstill. So naturally, it comes to the zero level or maybe the negative level, and then it bounces back. And given the fact that the regulators, basically the policymaker, I call it, whether it's the central bank worldwide, Reserve Bank of India in India, and Government of India, Finance Ministry and the other ministries, how well actually they think through these problems and then prepare themselves for the future, so that countries like India, where the vast country, vast population, vast opportunities, big opportunities with respect to manufacturing activities as well as consumption, and the global investors do look at India as one of the destination for the investment, and that only keeps rising. The probability of more money, more people considering India as another great investment destination is only keeps rising. And given the fact that India will remain one of the largest economy, fast-growing economy in the world, so that's being the case, we cannot afford to be negative on market. But having done that, you'll probably see an ups and downs in the market. I think as your normal life comes back to the economy for the citizen of the country, and then the activity levels come back to the earlier levels with respect to the construction activities, whether it's the road, whether it is a port, and then the travel starts picking up. May not happen immediately, so which is nothing but reflection of the activities. As the activity starts coming in, and then as people start spending on their necessities on an ongoing basis, then economy will come back. So therefore, the 2021 could be a year of economy coming back big time for India. So therefore, that's something I think you have to keep in mind. And third is, which of course I mentioned about policymakers, creating the right environment from a policymaking point of view is also key to the success. And today, the central bankers have brought down the interest rate so much, which essentially means that people have to look for investment opportunities outside the interest saving instrument, like fixed deposits, or such a low interest rate prevailing. Should I save or should I spend? I think this question also will come among people when the savings rates go down significantly. Either you go and make a huge investment, or you also spend your money on your necessities, or maybe the other ways and means of building your other activities. I would assume the investment also will pick up. For example, if I'm running a company, if interest rate available at 6%, should I borrow at 6% and build a business that can give me 20% return? Then naturally, people can start thinking on those lines. And the return on investment, what they call the return on as capital cost comes down, then naturally the more and more entrepreneurs can also come. Therefore, I think we are at a stage, the India would probably generate the more entrepreneurs as we move forward. And the pandemic has made a lot of people to think how I can live on my own, how I can start my own business. For probably the next decade, you'll find more entrepreneurs coming from India, so which will again create some kind of uptick for the economy of India post pandemic situations. Therefore, I'm quite bullish on the long term. Short term, of course, we will see some bit of ups and downs as we see in the global market. But otherwise, longer term, Indian economy in general, political scenario in general in India, and also the far reaching heights which we are gunning for last few years may come actually in the next 10 years.
Okay, so the kind of news that came in on the macro front, the markets didn't really have a sharp reaction to that. So would you say then that the markets are probably a little overvalued for the short term, or you think because the worst is over, so people are bullish because of that, and therefore taking a mature approach or taking an approach for a longer term, they are stuck to their guns?
Yeah, I think the way the market is run up ahead of the fundamentals definitely makes a clear case for one market being overvalued, is run up too fast ahead of the fundamentals. That's fact remains. Therefore, one can assume there is an element of risk that is associated at this point of time investing in equity on these assumptions. But again, the question is, when I'm bullish on the longer term on equity, then can I actually get worried about short term? Because when it reverses, will you be able to catch at the same speed at which the market will look at, or maybe the economy will look at? Very difficult. Therefore, the investment world point of view with all of us, one need to only keep that disciplined approach of investing continuously, and even if the valuations are high, the longer run, such kind of investing at ups and downs, you'll sometimes invest in upside, sometimes will invest on the down market, sometimes will invest in up market. So because the very fact that you have high discipline that you have of investing irrespective of whatever happens in the market at regular interval, with a clear view that I'm investing for 10 years and 20 years, then that one should not bother about such kind of fluctuations and market valuations as well. But no doubt, the market has run up. So therefore, that's pushed a question mark on, should I burn my finger if I invest now? So the answer could still be, may not be available, or maybe have the feeling that yes, it can fall. But the fact still remains that I'm coming for long term. Therefore, just keep building the exposure to equity in a gradual manner.
Okay. How about the debt markets? Because the interest cycle is also, has been towards low for last 6 months to 1 year, or maybe even a little more than that. How are the debt markets looking like?
So the debt market clearly, I've seen a significant rally in the last 1 year because of the interest rates being dropped by Reserve Bank of India on 23rd of March, and then subsequently 27th of March, and subsequently they have taken more calls to cut the interest rates and increase the liquidity in the banking system. And they also kept the currency more stable, and of course more currency coming to the country also increase the money supply in the systems. So therefore, interest rate environment today is more favorable for investment rather than saving. See, the savers could be a bit disadvantaged because rates have dropped, but for the investors who want to make an investment by borrowing, it become actually that much more attractive. Having said that, and the fixed income space also will go through this kind of ups and downs in the interest rate volatility. We saw 2018 credit issues. Then credit issue now is behind us. Now no more credit issues are there. It's about more stable. So as long as interest rates remain stable, policymakers remain stable, and outlook on inflation remains muted, then interest rates will also remain somewhat in a narrow band. Therefore, fixed income as an asset class should always be considered as part of the asset allocation of investors. Because I'm too bullish on equity, can I afford to put 100 rupees or 100% of my money in equity? The answer is no. Because interest rates are low, should I completely avoid fixed income? Again, the answer is no. There are different products within the fixed income space. Taking into account the trend that emerging, and consider that investment as part of the asset allocation in the portfolio, such as liquid fund, such as low duration. All such funds will be an all-weather fund. So in every category, there are all-weather funds. Those all-weather funds should be part of the asset allocations. So that's where fixed income, I see it. Fixed income, no doubt, interest rates are low and will remain like this for some more time.
Okay. Well, thank you, Bala, for all these lessons from the markets, from your life, and from your experience in the markets. We really appreciate your time, and thank you again, and happy Teachers' Day to you and to all our viewers again.
Thank you, Naveen, and it was wonderful discussing with you on the Teachers' Day. Once again, I take this opportunity to thank all our gurus and teachers for having whatever the knowledge they imparted to us, and the wisdom directly or indirectly they given to all of us. Thank you.
Well, guys, you can actually take down the lessons, maybe note them down, and maybe a few years later you will remember, you will see that these lessons have really helped you in your journey, whether it's investment or life or working in the industry. But we'll wind up this episode here, this Teachers' Day special. But if you have any suggestions or feedback, do write in to us in the comment section, and we'll be happy to discuss those with our experts. We'll wind up this episode here. Thank you so much for watching. This is Naveen Soni saying goodbye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.